Get some music going here today. What do we got? Oh yeah. Oh, that's some good Sunday morning music. Maybe a little loud. That's all right. Yeah, let me turn that down a little bit. It's coming through the mic, isn't it? That should be better. All right. I guess I should turn on the webcam as I usually do. Oh, actually, you know what? Let me change chairs here. There we go. Okay, well, let's get started here in a few minutes. Still early, very early, as I've not been up that long yet. But this is the only time that I could do it, so here we are. Let's see. Gotta find my trade tracker. There we go. Make sure that's showing up okay. Yeah, I think so. Yeah. Slightly cut off, huh? Very cut off. There we go. Wait a second, how was that so cut off? I checked it before I started. I guess not. Here we are. The new and improved Trade Tracker 2.5. Oh, it was okay. There we go. I'm losing my mind. It's because it's early. Alright, hopefully that looks good. Oh, it was because I had other stuff messed up. Okay, sorry about that. Okay, good morning. It is... Nope, Gemini, I don't want you. It's Sunday morning. I don't normally do this on a Sunday morning, but... Again, it was either now or never. So... And there's a lot of stuff that happened this week that is worth talking about. I think, anyway. So... I don't even know where I want to start. But... Nice green watch list for the first time in a while. We'll look at the greener side of things. Hello. Oh my goodness, your name's hard to say. Hey, European friend. I'm still gonna try to say it. Julio Cachette. I'm sure I destroyed that. I'm sorry. Well, welcome. Glad to have you aboard. Normally we get some people jumping in, but again, it's early on a Sunday, so it might be a quiet stream today, which is all right. It's all part of it. But hopefully you all had a good watch list as I did. I'll move some stuff over here so it's easier to see. Some big finishers here for a couple. We did cool off across the board for most things, but man, NBIS and Pattern were off the charts. Coin 2. CoreWeave 2, Reddit 2. Ooh, 666, nice. Nice Reddit. Reddit always doing the unexpected. There was a way in TradingView to add like emojis, aren't there? Yes. I wonder if there's like the devil face. There is. Nice. Very professional. That's what Reddit gets for their 666 finish for the week here. But I'm not complaining. That was a nice bump back up. Although it looked for a moment like we were going to break past our top bars here for the prior week. And we did, but we couldn't hold it. So we actually finished just equal with the prior high over here. But maybe more importantly, we finished above a couple of the key EMAs, the 21 and the 34. Not quite the 50 SMA. That'll be likely not until earnings next week. But yeah, if earnings are good, I'm looking forward to seeing some action with Reddit. Oh, I got to start the event. That's what I forgot to do. Again, I'm going to blame that on morning brain. Event started. We're live. Okay, cool. Jeez. But yeah, so Reddit had a good week. I mean, if you look at just the week, Monday, Tuesday, Wednesday, Thursday, Friday, very, very short trend line here of amazingness. But this one I wasn't too worried about, this drop below this imaginary line that we made up. And mostly because this was related to all stocks dropping on Monday. So it was kind of like, whatever, we'll be all right here. But nothing really matters until next Thursday when we have earnings. So, okay. Well, it is 8 o'clock. So we're going to get into the show, as it were. And I think I actually updated everything pretty good here. Maybe I should zoom in a little bit more here. How's that look? That's pretty good. I'm not really covering anything but the thermometer. Yeah, so overall, I finished the week not at all-time highs, but pretty close. And that's mostly due to Reddit, where I've got, 35% of the portfolio tied up. Well, you have to look at it as Reddit and Reddit TL, RDTL. It is no longer 35% after the drop, so now it's only 27-ish, pretty close, slightly over 27%. But if we get back to where we were at like the 260 level, yeah, it goes back to a 35% position. And then at that point, I will peel off most likely RDTL in particular, which is biting us a little bit. This position's down like, I think 15,000, no, 20,000. That's the risk you take when you buy these leveraged funds. But I'm not like long-term worried because the overall port or price target there is, for me, well over 300. It's actually 500 long-term, which I know seems crazy to think looking at the numbers right now. But we've gotten up to 285. If we get back there, forget it. All bets are off. We get to mega all-time highs thanks to Reddit. But yeah, otherwise, everything else is just about or is at all-time highs for me, and that's kind of exciting. Overall earnings for the week was just under 15, but over 1%. So, unfortunately, I guess I could do this. If I just change this to 11 or 10, 24, 2025, yeah, it was 1.11%. Very cool. So very happy with that. My target is 1% a week, and we've been maintaining that pretty consistently. On average, definitely well above that, and a couple of weeks here and there where we are below it. So, hey, Crazy Jay, good to see you. Addison Odell, welcome. Cooking breakfast for the kids. All right. Alec, you got fancy X's in your name now? Is that new? Did you do that recently or back in 1995? Oh, double down to win. Good. Nice. Welcome. Good to see you, man. So yeah, overall, it's been a really good. It's been a really good summer into Q3. So literally zero complaints. I look forward to my next mega spike. I don't know when that's going to happen. Probably not till Reddit earnings, I would guess. I'm going to Reddit earnings. I know I'm talking about it a lot, but it's going to be a big piece of this upcoming week. And I'm going into Reddit earnings uncovered. Although I've debated covering far out, but it's not worth it for the return on what we would get based on where it could go, which is 300, arguably. I really don't want to cover it. Because if we go past, we could just go to this 285 level again up here. But I think based on how we've stepped up in the past, like we went from, keep in mind, the last time we mega cupped, we did 165, and then we were hanging in the 140s pre-earnings, and we jumped to 247. So like, let's just do the math there. That's 100 divided by 145, call it. That is, did I do the math wrong? No, that's a 68% increase, right? So that's huge. No, that's not 68%. That's 32%. Well, we can just do 145 times 1.6. Whoops. 1.6. Oh no, it was. It was 60% over a few weeks. So if that were to happen again from where we are right now, which is 214 insanity, call it 215 times just 50%. I mean, we're in the 300s clearly. So this trajectory though, like I think you could draw a trend line across this from here to here. I'm not going to because the macro is so wonky. But I don't want to cover. I don't want to cover at 280 because if we do run to 325, which I turned the fibs off. Let me turn the fibs back on. This is reasonable. Are we going to get there? I don't know. The golden level, though, is almost 400. We're at 391. So getting into the 300s is not out of whack. I mean, it would be wild, but it's not like impossible based on everything that we're looking at, that I'm looking at. Also, I'm curious what the cloud's at. Yeah, so we're under the cloud. Where's the buy signal? We should have a buy signal here very shortly, I would think. There's the sell signal. Where's the buy signal? It's coming. Welcome from bed, Alec. I'm glad to see you just watching from bed. YouTube is using the handle. Yeah, I don't understand YouTube these days. Hey Colton, good to see you. Oh, Saul made it. I know it's Saul with that epic avatar, the Good Theta avatar. I want to click on it, but I can't because it won't. I don't think I can anyway. Can I? No, I can only like report or block you. But you got a cool looking avatar, man. I want to zoom in on it. Rise and shine. Shit, you're right, dude. It most definitely is. All right. And immediately distracted by stupid, sexy Reddit as we try to go into things here. But again, not surprising based on the position size here. This is mostly up to date and version 2.5. If you don't have this tracker and you like it, man, it's getting warm in here. Check out, you can get this exact version now. It's on the Discord. I got to post it on After Hour. It's not a huge change, but I love it because, and shout out to Masley for helping me with figuring this out because I couldn't figure this out. This is the last frontier of now it highlights when I have things covered live, and that's amazing. So I'm super psyched about that. He also made it where cash secured puts are working better, where if you've got that, I don't have any right now, but if you do, you can have multiple strikes and it now shows them all. Prior to that, it didn't show all of them. So like, this works. The only thing that doesn't work per se is it's kind of static in how it's shrunk to this exact window size, right? Like these rows won't expand beyond. Actually, these will, but it'll look stupid. It's not dynamic. Maybe that's a future fix, but I don't know how to do that without making everything look silly with the formatting that I have. But anyway, it's on the Discord if you want it. If you don't know what that is, I think it's in the description right now. Also, for everyone who joined, I have 0 likes starting. Like and subscribe and all that, right? Okay, let's get back to the trades. We had a lot of trades this past week. So this week was weird because of the interactions with the macro stuff going on. I didn't have like hardly any trades at the start of the week, but then I ended with a full page worth, which is cool. And I lined some up for next week, which then I already bought a couple of these back, the Oscar ones in particular, which we'll get through towards the end. And they're not lined up together. Maybe they should be, but this was actually a last minute trade that I made on Friday. So let's start with where we started. And that was, I had a bunch of swing trades and leaps that were in the profit. And I said, you know what? I'm out. I don't want to do this anymore. Sometimes you learn what your conviction is while holding a stock. You think you have conviction, and then you're like, I don't actually care about CRM at all. Why am I doing this to myself? So I got out with some profit. I'm like, that's good enough. Is the music okay in the background, by the way? You want to update, but you made so many. Oh yeah, well I can't help you with that, Alec. That's just bad form. I don't know what to tell you there. Well, DT, I can see your avatar, so I'm good on that. I also don't know why I should have called you by your handle. I apologize for that. All right, so CRM. These were leaps that I bought. Okay, so they were January 27 leaps, but I need to start making notes of when I buy these because I forget. I think I bought these, well, we could bring up the chart, a couple weeks ago. And we were like at 250. I even took it off my watch list because I'm like, I don't care. I don't really care about CRM. I think I bought them somewhere over here in the 240s, and they were 250C or 240C. What were they? 250. But we were maybe it was back here, actually. So it wasn't like perfectly timed by any stretch, but things were turning bullish at the time. I definitely got them in October, I feel. So I sold them here. We spiked up, and I'm like, I'm out. I don't need to live with these forever. Even though they're leaps, even though they've got a year on them. I wanted to free up the cash. I also had no cash at the time. So $2,000 in profit over, well, let's just do the math here. Whoops. I wanted to click on the calc. The math is, make sure you can see that. What did I say? 1905 divided by the initial capital outlay of 13K was 14%. And let's just pretend I held it for a month. Like annualized, that's 173% return. So generally with the strategy that we employ here of selling options, I'm starting to find what I like on leaps. And the problem with CRM was, and you'll see this on my other charts as we go through it, I don't have a leap target. I had no business entering this trade. It was, hey, we had a triple bottom. It seems really likely that we long-term start moving from here out this way. And so I entered, and I was like, yeah, look how much upside there is. But there's no saying we're getting up anywhere over here. In fact, what I ended up deciding, the reason I got out here was I was like, look, we're back in the middle of over this area recently. We're likely in a channel, and we might just drop back down, which we did, although it might be a bear flag. I don't know. It's not really a bear flag, but it could be, I suppose. And I was like, okay, let's get out. This is not a stock I care about, or that I believe in long term, right? So that was kind of my thought process. And a good lesson of never enter a leap trade unless you have a target. So as an example, let's look at TTD, which went super red at the end of the day. We got these big ass gaps, right? And the biggest gaps are the target. I think we're going to close the gap. And oh, by the way, I have until all the way out here, which this is cool, by the way. If you draw a line, it will highlight. You can see down here, right? It'll highlight when the leap or whatever the line covers. So I make the line to when the leap expires to give me a visual of how much theta do I have here. And the answer is a ton, because we just opened these. So I opened these somewhere over here. I didn't double down here. I kind of wish I did. But there's risk. There's risk with TTD. And I think Average Advisor hit that pretty well, actually, on Friday when he was talking through his things on the super video. What do we call that? Not the week in review, but his just like bi-weekly Super Daddy chat. So he talked about it there, and I agree, but I'm going to give it through a couple of earnings because I have so long, and that's the beauty of leaps. I'm of the opinion that any big company with good CEOs and leadership will find a way to be profitable long term, right? It's unlikely to me that TTD, which is market cap $25 billion company, is about to drop to 5 billion, especially from where we were. I think we've got plenty of concerns with the whole Amazon thing, but I bet they have plans to mitigate by now. They've had plenty of time to think about it. They are obviously very well versed in the space. They've been around for long enough where they know what they're doing. Look at this. I mean, chart goes back to 2016, and certainly they were around before then. So I look at this as like plenty of time. But back to my point of I have a target, which is simply 88. And if we get to that point, that's a ton of money already. If we happen to close this other gap up here at 111, 112, whatever this actually is, I don't know. It's too many lines. I got to turn off the, there we go. So like this gap goes to 118. So this is actually a bit low. If we were to go to that target, oh my goodness, that would be the play of the year for me. Now, I don't know. That's pretty far out. Realistically, we're talking second half of next year, maybe, if we have a good run. I mean, that's like a hood level increase. Like if we go to the hood chart, right? Where you at, hood? Did you go red, hood? Okay, well, let's just sort this so I can see it. This I forgot I made the mega cup on hood, by the way. Yeah, so if we have a growth angle like this trajectory, then obviously there's a chance that TTD does something like this. But this is just charting. This is not saying, we have to see what the earnings actually have to say. What's the guidance look like? And hopefully it's good guidance. But long story long, we have a lot of time on these leaps because they go to January 2027. If you have shorter dated leaps, I think you've got to watch earnings and then make a decision based on earnings very quickly. Like if you're only in January of this year, or by 2026, I should say, then you don't even have a second earnings run. And depending on what happens here, you're probably either rolling or potentially taking a loss. You're gonna have to go through that thought process though. Maybe I should change this so it maybe that text is a little too big. Let's do 32. Okay, there we go. Okay, let me catch up a little bit. Hey Kate, good to see you. Oh, we got a bunch of chat going on while I was rambling. Apologies. Oh, I gotta go way up. What was the Bloomberg message? I saw it, somebody posted it, but I didn't read it. Let me see if I can find it real quick. Is it in Bloomberg, or somebody posted it in what, like this general discussion? China and U.S. read trade consensus. Yeah, I mean, if that's the case, well, honestly, if that's the case, I would think generally bullish. We'll find out tonight on the extended hours, which obviously haven't happened yet. Is Bitcoin doing anything? Because Bitcoin's 24-hour, right? So, I mean, yeah, maybe, I guess. That looks pretty bullish. That's good for my IBIT and ETH. But what I kind of am sad about is I sold all my ConL. I sold ConL, by the way, and we'll might as well talk about this play because I've already beaten to death this dead horse of CRM. So let's talk swing trades, and one of them was ConL. We can just jump into ConL down here. I'll move it up actually to go with the other swing trades, even though the date doesn't match up. Yeah, we had some swing trades, and ConL was a good one that I got at 33.5, which was, on the way down, 33.5. Then we had that drop all the way down to 30. And was anyone on the call when we talked about this? Because I talked specifically about there's a good chance that we're going to touch like the bottom fib here, or this fib here, maybe the 200 SMA, but also a chance for matching this bottom fib. Now the coin, the underlying was, the chart's different, and this is my conspiracy theory that I've had lately. Like, look at what we touched here. We didn't touch the 200 SMA. We didn't touch the bottom line on the bottom fib. We did all that on the 2X. So, the conspiracy is, I think, institutional traders are doing more and more with these 2Xs because look how much more money can be made here, especially if you're manipulating effectively, which they are. I think these are the charts we should be looking at versus, the underlying always. And the same was true for Adobe G, ADBG on Adobe, which was the other swing trade I did. And, okay, maybe not on Adobe. No, it was. We were testing specific fib lines here too. I took Adobe. I took the main one off my watch list. Like we dropped below the fibs here entirely, which is generally not like a thing. I mean, it can be obviously, but normally you would think we would test either this resistance line from the past or the bottom fib line. Yet instead we dropped all the way down. Oh, hello bull flag. Wait a second. Okay, this is a bull flag. Maybe we're swing trading ADBG again on Monday. I don't know. We'll see. There's a potential here that we've got bull flag written all over the daily. I like it. But yeah, so those two trades though, they were all of a sudden it seems like things are getting more and more driven off of the 2Xers. And Kana was very clear. Look, this is the one touching the bottom fibs, not the underlying. All right, let's look. Make it bigger. Make what bigger? ETH rockets? Did I look at ETH? I didn't look at ETH. What is the ETH call sign? That's not ETH-A. Is it just like ETH-USD? Yeah, I guess. What do we got? Is this Sunday? Yeah, okay, this is the right one. They're moving together, right? Like, look. We can do the fancy 2 window. Open anyway. Oh, I didn't save things. What did I not save? Yeah, I mean, this is CoreWeave and then Biz. Also probably going to be up. We had ETH and Bitcoin, right? Okay. I mean, these charts are going to line up very closely. There we go. I mean, look at that. They're like mirror images, although maybe slightly bigger drops on ETH. ETH is the 2X of BTC. Is that what's happening here? I mean, whatever. You get it. Like, we go up together, we go down together, we go up together, we go down together, up together, down together, up together. I don't really look at this. So I got into this split of 50-50 ETH and IBIT, and I don't see the difference. Like, I don't really understand why I wouldn't just have everything in Bitcoin. I don't see ETH ever. Okay, let me disclaimer. I don't know nearly as much about ETH and Bitcoin as some of the other coaches and users here. So this is like noob speculation on crypto. I've been around crypto since the early 2000s, but I have not that early, like 2010 era, 2007. But I've never like followed the chart until recently. So just throw that disclaimer out there. But at a glance, I'm like, I don't know. They're the same image. They're the same chart meme, right? Like, you know what I'm saying. But regardless, glad to see them both coming back up here with positive China news. For sure, that's got to be what's driving this. Which is, I think, a good leading indicator for the market. We're probably going to open pretty green, is my guess. All right, let's go back to the Tau. I guess I don't... no, let's save this. Right. Save. Perfect. Probably should have saved Tau. We got the bull flag, though. Okay, let's save that. So, yeah, we'll be looking at Adobe. We are way off track, though. We didn't even talk about the other leaps that I had. So, Target was another one. We talked. ADBG and Connell ended up being, like, at first part of the week, half of my gains. Could have made more in both. But again, I'm only ever looking to be directionally correct. And both of them had good returns for what I was looking for. And honestly, I'm not sure I want to play ADBG for a while. They've been a little scary in their movement. Connell, arguably, too. I mean, all of these. Everything can go up and down as they do. But they have stayed in the range. So never mind. I'm going to keep them on the list. We'll keep swing trading those as opportunity arises. Target. Okay, so these were leaps that I'm pretty happy with. And I bought these at a good price. I took them off my watch list too. Down here. Somewhere down here in the 80s. And I sold, were they 80 or 90 Cs? What were they? 85. Oh yeah, they were slightly in the money. So it was down here, right? And I did have a target, leap target. And I decided that this was another one as we got out and have kind of cupped here, which by the way, we might cup. It's not really a good cup because the volume doesn't really line up in a cup shape, but I do think it's likely we're going to find our way back to here, this 98, 99 range. But again, I was able to sell it up here at the 95s for a nice little return. And I had them for, again, about a month. This was a small play. So 1415 divided by 5905. Yeah, a little 24%er, but I'll take it. And if we were to annualize that, 12, that's almost a 300% return. So I didn't hold them that long, less than a month. And it was kind of a hedge play, but also a value play for sure, because we were double bottoming. This was it. This was my DD on this. And Target was greatly affected by the whole DEI thing, where the rollback and they just plummeted because they don't understand their own clientele base, apparently. It was dumb. That was a dumb move for them. They should not. Like, knowing the people that I know that shop at Target, like, that was the wrong move. I get it from a money profitability standpoint, but like, that was a cost of doing business for Target. And they missed the boat on that one. But like, historically, they had been like here. I've been keeping an eye on them for quite some time. These are good buy levels at 100. So when we pop down into the 80s, I'm like, all right, this is it. There's no way that we're valued correctly at this point for the size of a chain that we are. Yes, they're not Walmart. I know that, but they're still greatly preferred by a certain subset of shoppers. So long term, they're the alternative to Walmart. Now, there are some others, but not to the size and scale of Target. So that was essentially the DD in the play. It worked out well, but again, I don't have that high conviction on Target, and they've been whiffing on earnings too often, where it's just it's not a long-term comfort play for me. So happy that I got in at what was a clear bottom, and I think most people would agree when you look at the chart. Like, yeah, no, that was a clear bottom, right? And then getting out. Now, obviously, there was a big drop that I missed out on. I could have doubled down, probably should have, but I'm generally not super comfortable on doubling down on leaps quite yet, but we'll see if we get there. Let's see, you got into Con-L too, just a bit earlier. You sold 5%. Okay, that's cool. Yeah, that's a good point, actually, Alec. I had way too many positions and wanted to get out as well. So one of my things on the dashboard you'll see is this box of holdings is a certain size for a reason. I don't want to hold more than this many individual tickers because it gets hard to follow. And I got a buddy who I met with, I don't know, a few months ago for lunch, and he showed me his port list, and the dude had and I'm sorry, Nick, if you're watching, I don't think you are. He had 50 different tickers. I'm like, I don't know what you do with this, right? Like, there's so many different. You just buy just buy SPY at that point. If you have 50 tickers, you're so diversified within your portfolio, most likely, that it's too much to keep track of, right? So just move on. Now, overall, I didn't have that many positions, but when you considered a lot of the leverage shares funds, I actually have things that aren't even on this list, like Clove, because it doesn't fit anymore, and I'm not really paying attention to it anyway. But I took it off because it's like $8,000 from a year ago, and eventually it's covered. But it's just not worth. It's noise, right? I'm not looking to actively manage that. So there's a threshold now for me of at least a certain value, at least 1%. If it's not 1% outside of leaps, then I'm not even putting it on, right? Which, by the way, I feel like I should maybe, instead of this, Maybe I change this to leaps. Maybe we start to, because I rarely hold CSPs through the weekends, and so when I'm looking at this is almost always empty because I don't look at it during the week. I think I'm going to do that. I might change this to leaps. Very nice. I like it. Good suggestion, chat. Very helpful. All right. Well, Kate, if you want, there's a new version that just got released, and I think it's pretty straightforward. If I did make a video, by the way, on like how to use it. Maybe I should make a new one on it now that it's like updated and has some other features. But nothing's really changed here on how it works. Okay, so we talked about leaps and swing trades and more leaps, and I think that's it for the swing trade. Oh no, I have one other leap that I sold. And that was Lunar, which, okay, this one, mild regrets on. Not because I sold it, but because I just never bought more. I only had 10 leaps on this, and they were cheap at $1.80. Meanwhile, I have 25 of Goodyear, right? Like, come on. And this was a real nice trade. It worked out very well. And only made, is that right? Yeah, it only made $750. So for something that I watched so long, man, I just didn't buy enough of it. Is that right? I don't think that's right. I feel like I did have more than that. I'll check that later. Maybe it was 20. That doesn't seem right. But regardless, 750 divided by 1810 was... what am I looking at? This isn't right at all. Oh no, that is right. That is right. Okay, so 41%. I held this also probably a month. I mean, like, it's a 500% return. I can't be upset. The only thing I could be upset about is poor position sizing. This was, like, way too small to do anything meaningful. And I actually had, like, mild conviction in this play. So, what the heck, man, right? We are cup and handling here, by the way. And I got out on... Oh, okay. I'm sorry. I'm thinking of old leaps and new leaps. So I sold Lunar leaps like last week or the week before. Yeah, here. Duh. Still, okay, it was 20% or 20 contracts on that one, and that one made $6,500. Okay, that makes a whole lot more sense. These were these were calls. These were degenerate short-dated calls. That's what it was. Okay, so never mind. I lost my self in too many trades. So 750 on degenerate calls, which is why the position sizing was smaller here. They were short dated to November 14th. And that's just past earnings or projected earnings. And they were up 40%. So I don't regret that play. That was good. That was fine. Now, if we continue to fill out this handle and drop again, I'll probably do that play again. Are we actually going to cup and handle here? I don't know, but we do have a cup shape in the volume, and we do have consolidation happening. So I'll draw that out for what I'm talking about here. And this is, you gotta from the point to point. It's not exactly a line, but you can kind of see this shape here, and then this shape here. Whoops, I forgot I clicked that wrong. Give me that. There we go. Right, this consolidation of the volume, you can see obviously is declining just in the last couple of weeks, which is what you want to see for a cup and handle. And so I decided to put my money where my mouth was. When we touched this bottom line here, I bought those degenerate calls, and I thought we might be handling early or got arrowing early, and I sold it here when we were in the mid 13s. And I got the max price. There were a couple mistakes on this trade that I would do differently next time, and that is the November 14th was poor liquidity because it was a weekly, and I should have just did the November 21st for way better volume and liquidity on those options. Whoops. It still worked out fine. I was very happy with my fills, but this took a while to fill, and I actually had to chase it a little bit. You know, when you're like, you see the spread was 225 to 285. So I was like 280, 275. And then I said, you know what? The game was being played I put 250 purposely. I'm like, I'll be happy with 250, but if it doesn't fill, I'm putting it back up to like 275. And every time I moved it down, like every order moved with me, which is so weird to watch on the upside on the ask. So filled at 257. And I was like, okay, I'll take 40% in a day. Yeah, this was a like bajillion percent play. 750 divided by 810 times, annualize that. It's like 1,000% return. Yeah, not bad. We'll take it. But I don't think, I think I could have done better on it, is really what it comes down to. So, okay. We haven't even gotten to the option selling yet because there was so much degeneracy going on here with swing trades. But now we can get into it. There were some shares. There were some things called away. I guess Envil was the other swing trade I did. Let me move those up there. I sold these two early as well. Who knew? But again, I was actually happy with this because it was a very short play and I was underwater for a little bit there, bag holding. But 7K on swing trades. Oh no, that includes. Sorry. 5K on swing trades overall. That was great. That was just, making stuff happen when I felt locked in from CCs where I couldn't, I didn't want to buy to close any of these until it was like 5 cents or less, which then I started to do. So that takes us to exactly that. I was heavily deployed in shares and locked in with covered calls. And so they were good covered calls. I would have loved for all of these to get called away, but none of them did. And they came close. Actually, at one point, I thought Joby was going back in the money. And I ended up reselling when that happened here. You can see for a real nice CC, about the same price that I did for this week. But overall, from CCs alone, I got 4,000. And then this was a next week CC that I just cashed in early on for another 680 at the end of the week. And we'll talk about that in a second. So for these just sat. I let almost all these go to expiration until Thursday or Friday. Even though I could have bought them back earlier, I was like, I'm not interested because things were dropping and we didn't know how far things were going to drop. So in those scenarios, I just wanted to max out the profit. But when you can buy back at 6 cents or 5 cents or 3 cents or 3 cents, you do. Because, this was wrong. Because this was a very clear play of redeployment, which I did, right? So you can see that I bought CoreWeave back, and then I resold it for next week with extra theta. And I waited, actually, this was great because CoreWeave, I bought back, where is it? I bought back down here, somewhere, like in this vicinity on Thursday, for that great profit of 95% or whatever it was, or maybe that was 90%. What was that one? CoreWeave was 85 to 6. Okay, so like 92%, whatever that was, and then resold them on this spike up. And I didn't sell at 132.85, but it was 131, which then look at the premiums for that one, 2%. That's amazing. I for 1,000 shares that I'm also happy to own, I'm thrilled to sell this at 140. That would be a nice profit of what is 2.87 plus 3.5. 2.87 plus 3.5 times 1,000 is $6,300 on what's the cost basis here? 137.50. Yeah, so 4.6% return. I messed that up a little bit, sorry. Did I? Yeah, slightly messed up. So I think it's 4.6% return. Yeah. No? Well, whatever. It's a good return. Yeah, it's 4.6%. I don't know what's wrong with me right now. So overall, like, I'm thrilled with this trade. This will be great. And then I did the same with Joby. I was able to buy it back for 5 cents, which is 90% profit. And generally, you do that if you can, because I resold it. Similar story before it kind of fell off later in the day here. but I was able to resell it for a nice 2% or more than 2%, right? What was that one? 50 on 17 is like, yeah, 2.5%, right? 17, almost 3%, 2.8. So like this is a great play, and that's how you want to be doing your CCs. When you get those swings up or down and you have a chance to buy back at over 90%, almost always do it. Almost always do it. NBIZ, same deal. Actually, no. I didn't buy to close NBIZ early. I was uncovered because NBIZ decided to dump, and Showcase knows what I'm talking about here. Showcase here today? I don't know. I don't see him. Tenant Thud. Speak. But we were down here, so I was unable to cover. My cost basis was 125. And then we dropped on Friday. Monday, Tuesday, Wednesday, Thursday, Friday. Yeah, this is Friday. Oh, it says it down here. So, like, I was like, let's see what Monday brings. And then Monday, Tuesday, Wednesday just dumped all the way down to the 25 or the 50 SMA. So, like, that's an example of I don't cover. I just wait. Like, it's a little unproductive for the cash. But as long as I'm hitting my 1% across the portfolio, I generally don't care that much. And by waiting, I was then able to get CCs up here at 130, which is not a huge dollar value percentage-wise on the actual. Actually, it's not bad, right? It's over 1% on the capital ROC here, and then it's also, so this is like one. Well, let's just do the math real quick. So we've got 155 divided by 155 divided by 125 is my cost basis. 2.4%. I did this wrong again. No, that's right. 2.4% plus another $5 if they get called away. Divided by, this would be, cannot divide by 0. I know. I didn't want to do that anyway. 125. So 4%. So it's 4 point. No. I keep doing this wrong. What is wrong with me today? Because it's not 500. It is 500. Yeah, it's 4%. So it's like 6% return on this. And I'm very happy with that if it gets called away. That's a fantastic return. Also did some interesting things with ONS here. Actually, before I get to that, Oscar. So Oscar we bought back for 3 cents. And then we resold the 21 call for 85 cents, which was a better price than I got last week on it. But then the entire health sector tanked for whatever reason. From up here, 2044, we closed at 1929. But at 2044, I was able to resell that at 85 cents for the option. So I did close this one out early for 40% profit. Okay, fine. That's right. Like, look, if the market's going to give you a free 40% and potential overreaction of the stock, you know, if we continue in this wedge that I've been looking at, which I guess I need to slightly bring that down now. If we keep in this wedge, well, on Monday I might be able to sell the same thing. Look how all over the place we've been with Oscar. And I will very happily cover this at 21 again. Ideally, getting called away before earnings. Maybe I'll buy back in before earnings, but earnings is... I'm a little nervous on Oscar for earnings. Not for any reason other than I'm not following it that closely. So I'm not sure I want any exposure there. But overall, this has been a good set of trades and a good example of, in a day, if you get a 40% buyback opportunity, take it. Why not? For when you have 6 days till expiration, right? Because, like, again, here's like where that option should have been by the end of the day. It should have been, what's 1 divided by 6? So we are 16% into the theta decay times 0.85 is 14 cents. So 0.85 minus that 0.14, like the contract should still be worth 71 cents by the end of the day if nothing changed in the price other than theta. But in this case, it was 0.85 minus 0.5 or 0.35, right? Giving us 0.5. I'm not sure why I did that, but you can see how we're way ahead of the schedule, the theta schedule. That's the math, the time value. We're way ahead on that time value. So we cash in because there's a high probability that we can be more effective and more efficient with that cash when we're that far ahead right now. It's the whole bird in the hand thing. If you got profit, take it. Normally we say wait until 50%, but this is, again, because it wasn't even the same week and I'm a day ahead of next week by selling the option on a Friday, 40% is fine. And you should just take that in all likelihood. Unless there's a clear catalyst that we're dumping. Now, there wasn't, in my mind, a clear catalyst. Let's look real quick, though. It's nothing, right? So it was something sector related where HIMS did the same thing. Almost the same percentage, probably. HIMS was... Well, it says, oh, we finished up 0.6. And so Oscar probably did too. No, it was down. But we had a similar drop throughout the day. We just bounced back and forth between them. Very similar looking candles, right? So I'm not worried about this at all. Did HIMS have any noticeable news? No. But like this is where I look at it. I'm like, let's take the profit because both of these are going to end up bouncing, I think. Now, HIMS even almost tested off the 200 SMA recently this week. Great price to be in, if you ask me. And I think we're going to end up back into the fibs here next week for sure in the low 50s. I'm not sure what happens after this. This cup and handle kind of happened, but then didn't, right? So, like, whatever. I'm not sure this even counts as a cup. It was a cup and handle, by the way. But we're already kind of like past that into the next thing. So now at this point, once we're past a cup and handle, I stop looking at it. I really start looking at what are the EMAs doing? What are the fibs looking like? And I think, it's possible we test all the way down to the 200 on Monday, which would be something in the 46 range, maybe, 46-ish. And I think we're going to bounce. I think we just jump off there. We'll see where it goes. Okay. Did I cover everything? No, I didn't. So then we had ONS. ONS is the last one that I set up for next week. Right? I didn't buy any new leaps, I don't think. No. So let's look at ONS. And ONS is one that is slightly saddening because I bought it at $10. I was like, oh, this is a great price. When we were bull flagging, it looked like for a bit there, only for it to be about to take a giant dump. Which it did, and here we are. We dropped all the way down to the 20 or the 50 SMA, bounced off that. We've had some pretty good bounce since then. Tested off the 21 EMA, and dropped back to where we were in the fibs, the bottom fib there. And from here, I don't know. I think we're fine. I think post we were up slightly, by the way, yesterday, but I decided I didn't want to cover on a weekly that paid basically nothing. So what I did was I covered after earnings, projected earnings on the 21st for $12, which is above anything we've done. But I like this because here's how this works. Sold $12 C while we're at a low price. We were in the 8s, by the way, when I sold this. We sold this up in this line here. So like it was much closer than it is now, than where we finished. For 37 cents. And I forced this one a little bit because I wanted this to go through. And the math is real easy here because it's on a $10 cost basis, 37 cents is a 3.7% return. And annualized, if you include that 37 cents plus the $2 per share appreciation for 237, let's do 237 divided by 10, 23% return, and on the annual, that's getting close to a 300% return if it gets called away. So the worst case scenario is 3.7 times 12, 44% return. Annualized is close enough. 50%, basically, I always shoot for 50% for an annualized return because that equates roughly to a 1% gain per week, right? It's not exact. I know you could use different numbers and compounding is slightly different, but that's my rule of thumb for when I will take a trade. But the upside potential is so high that I'm happy to take it. And with how much ONS is in the news from a defense industry drone sexiness standpoint, I'm all about it. So we'll see what happens. But if that goes through, I will most definitely take $4,700 on that trade. That's basically what it comes down to. Archer's still covered. I have not been able to buy that one back. Been sitting on that one, staring at it. I bet it finishes under 11. That's going to be my luck because it's after earnings. But, you know, realistically, the return's not terrible. 2,300 lined up for November 21st on a small position. 33K. That's pretty good. That's pretty good. I'm happy with it. And then, this is just a small taxable take, so nothing really there of interest. Then we got some leaps lined up. We talked TTD, AI I haven't looked at. We can look at AI real quick. I'm totally skipping chat here. What did I miss? Not too much. You guys are quiet this morning. Sundays are tough, huh? Okay, so I wanted to look at AI. AI has been wedging also, and it's been fine generally, right? Like, I think I got my calls somewhere here, so we were about break even, and then we were below break even, so they're not worth really anything right now. But again, and I did have a target on this one, by the way. Oh, there it is. Recent high is what I'm thinking, which is $30, and we're at 17. Whoops, put the RSI into the chart. Oh, it didn't. Damn it. There we go. So yeah, a lot of upside potential. These go until January, so a long time here for something to happen. And they have AI in the name. How can they not succeed? This is the one that Muffin Man spoke extensively about in the Bakery Weekend Preview, which is tonight. If you're interested in catching that in the Discord, open to everybody, free and paid members, of course. So yeah, I think there's a lot of upside here. The EMAs were starting to turn, looking bullish, especially when we were in this little phase here, higher highs, higher lows. Definitely wedging right now, possibly into earnings. But I am expecting a breakout, and Muffin is very much high conviction on the leadership team there. He knows some of them personally. So I look at that, and again, this isn't financial advice. Do your own due diligence. This doesn't mean anything. It could tank to zero. Who knows? But I look at this as a good upside potential, and I have, I think, 25 contracts here for a target way up here in the 30s. Now, will we get there? I don't know. But if we do, like that's going to turn into pretty big money. That 16K would end up being minimally, double, minimally. I could do the math here, but if the cost, these are right now, you can get them for like $6, by the way. So 30 minus, let's just call it 18 when I bought it, 12 plus a little bit of, so minimally it's 100% return if we hit that target, and then it'll be another $4 or something. So maybe it's 130% return target. And again, we've got a long time, so I'm not in a rush for that to happen. Then we got Huma. Huma is the young Ember play for anyone who's followed him on After Hour. He's got like Trogdor levels of conviction on this. He's doing a 15 post series on why he's so bullish on Huma long term. And the fact is, like, they're at, I don't know if it's all-time lows. Yeah, it's all-time lows. They've got a big wedgie going on here. They just diluted here, which is why we had the spike and drop. So that's generally, in my opinion, long-term bullish. Great opportunity for leaps if a company dilutes and you were bullish on them to begin with. good opportunity. They cupped pretty hard here. They're handling way down here. I think there's a big case to be made for, this is most definitely a sharp cup. Boom, look at that. You can see it in the volume too. And the handle's in a weird spot, but because of dilution, it's just offset, really. So, I'm going to draw it incorrectly. It's not perfect, but you get the idea. Something like that, right? I don't know. This could be a God Arrow scenario. So I'm interested in holding to see if it is a God Arrow scenario, because if it is, I think we're going way up here. Like, this is the level of IV in volatility that we've got. Actually, let's look at that. So IV, the volatility is over 200%. Crazy. Well, maybe not anymore. This is at the money IVs. What? I'm reading this wrong. Okay, so this is, I don't know what this is. This this is over 200% though for IV right now, and especially for next earnings. Seems good. Seems like some good potential, and it's so cheap that I'm okay if I lose this, if this goes to zero. And these are leaps, so they can go to zero. That's the risk that you take. But it's, for me, it's $2,500, slightly over 0.1%, I guess. I guess it's 0.2%. And I'm willing to do, I am willing to do a little bit of gambling with the premiums that we receive week in and week out. Then we got GT. GT continues to do weird things, but I got the leaps over here, and we hit this weird drop that I don't even know what this was about, but we're recovering. So I wasn't getting shaken off this horse. We got earnings coming up. We've missed earnings the last 2 quarters in a row, and I have to imagine that with this ridiculous multi-year low we're at, and this is why I thought we had support, by the way. This is COVID, so ignore this one, and the last drop point was here, so we double bottomed. Now instead we dropped down to here. I don't know what that means. Maybe if we go further out, that's a thing. I don't really see anything of note. And you got to go back, to like the 90s, by the way, to even be down in this area for the most part. Yeah, the 90s? No, early 2000s. So yeah, we were down below this 20-something years ago. Otherwise, I think we got a value play here. And my leap target goes to 2027, which, with how far I'm zoomed out, doesn't look like we have that much time, but there's a lot of time here, honestly. And my target is only the top of the gap. Now, we could go all the way up here, and if we did, geez, that would be a wild percent profit for sure. And the leaps were cheap. Again, this was one where $5K for 2,500 or 25 contracts. I continue to debate doubling down here. I'm not going to, I don't think, because my conviction's not that high, but for 0.5% play, less than 0.5%, a worthwhile gamble that has so much time to do something. And I also think with the tariff situation, an American-based company like Goodyear has got good potential to have some good news. I think the tariffs actually help Goodyear in terms of selling more tires. So that was my really short thesis on this one. Value plus tariffs for very much favored companies, American companies. I think Trump might have visited this. Okay. I feel like I remember him visiting Goodyear years ago. I'm not sure that's ever happened. Someone can Google that, but I'm not sure for sure. But that's my thought. I think we've got a chance to get back to where we want to be. And my expiration is way out here. So plenty of time to close that gap. And historically, we do close the gaps, right? Like, this is a year where we went from, we actually cup and handled here a little bit, I guess. We went from 12 to 7 to 12 in July of 2024 to June of 2025. It seems like there's a chance. That's all I'm going to say. And the recent trend has been pretty good. So we'll see if we can keep that up. I don't know if we can. But earnings are going to be of interest to me. And that should be this month potentially. I don't know when. I don't think they've announced it yet, apparently. But it could be coming up soon here. And that's it. That's everything. Oh, UNH. I have UNH too. So I got UNH leaps around here. Or maybe it was here. And pretty generally happy with it. However, I thought once we closed the gap, that was going to be a breakthrough point. Now we're just living in the gap here. So we're back in the fibs, but this is another one where earnings is going to be a huge driver in one direction or another. And I peeled off my share count because I just preferred, in this case, to hold the leverage version of leaps for better upside and less cash tied up. But the downside, if we drop back down to here, will be painful for sure. However, we got a lot of good things happening here if we have good earnings and we start working our way to the next gap, which is gap number 2, this purple one. This is a historical 3-year bottom, so it's kind of just an extra line that maybe I should change the color on because it's confusing. We'll make this, I don't know, some blue color. There's too many colors here. No matter what I do, I feel like it's going to be confusing. We'll do orange. But yeah, real high upside potential. November 3rd. Thanks, DT. I appreciate that. That is good to know. And look at you, changing names. So, yeah, a lot of potential going on this week. So if you're not already planning on going to the bakery, you should, because there should be a lot of good discussion this week with a lot of the big earnings coming up. And I don't think I have a easily accessible. Oh, I do. Here, it's in the weekly updates. There we go. You see that? That's pretty clear, right? Yeah, it's got everything. So this is upcoming earnings this week, and this is worth going through because there's some sexy stuff here that nothing. And Mondays are always there's hardly anything that of interest. I guess Bed Bath and Beyond might be interesting to some meme players. SoFi on Tuesday, first big one. UNH Tuesday morning, another big one. Going to be a little nerve-wracking. PayPal, UPS. Maybe Wayfair. Some people play Wayfair. And then Tuesday evening, Visa, EA. Nobody really plays those maybe a few people will. So then, but Wednesday we start getting back into the really big names. Verizon, Boeing, CVS, Caterpillar, Etsy, Meta, Microsoft, Google, Chipotle, which I know a lot of people have leaps on Chipotle. Carvana, which is surprisingly huge for a lot of people. Melli is just like a proxy of Amazon for the South America, and then Starbucks, right? Thursday, Lilly. Oh, shoot. I don't know what to do on Lilly. I might buy a couple degenerate calls on Lilly if we're honest here. I'm actually hoping that they have a drop. If they have a drop, you know what I'm doing. Back into Lilly X. Lilly and Merck, though, very tied together. We'll see what they do. Roblox, a lot of people have interest in that. Amazon, of course. Apple, Coinbase, Reddit, Strategy, which I'm out of that. Rocket, a lot of people are in Rocket right now. Riot, I'm not into Riot. Net, I'm not into Net, but we've got some players there. Roku was a Muffin Man favorite. And then Friday, even these are some big names that are, gas and energy related companies and some classical manufacturing type stuff. So, huge week. Maybe the biggest week by market cap of the season, just because you've got 1, 2, 3 Mag 7s at once. I'm trying to think, did I miss a Mag 7? I don't think so. Oh, yeah, I did. Amazon, 4. Also Reddit, future Mag 7 incoming, just saying. And then Lily. Like, these are mega there's so many mega companies. So this is going to be a wild week. It's making me rethink, is there anything I need to do for this week? Outside of Reddit is my biggest that I've got uncovered right now, which I'm planning on keeping uncovered. I talked about this early. But I'm trying to think if there's anything else that I want to play, especially on the CSP side. Certainly Google. And then I'm not sure about these two. Not sure. I don't play Meta or Microsoft very often. So let's look. They're not even on my watch list. Let's look at Google. By the way, this is a fun chart because we put on the weekly. I noticed this week. Look at that. Weekly bull flag. I feel like I don't see that very often. And I did point this out on the Discord of like, we might see some jumping here, especially into earnings. But as you zoom out, this always makes me nervous. This what? We're already at what? 3 trillion market cap. I don't know, man. I don't know. Maybe I won't play Google. Maybe I'll sit out and just see what happens. Makes me a little nervous. But definitely a bull flag there on the weekly, which is wild. Very wild. I guess let's look at Microsoft. I am curious. Oof, going into earnings like that, I don't like it. I'm not touching it. Not going to do it. Apple. Oh, wait, Apple was in it too. 5 of the Mag 7. Someone probably corrected me on that, didn't they? No. Rocket earnings and FOMC for rate cut is a wild combo. I agree. Good to see you, Illyris. Yeah, actually, that's a good call out too. Should be good, right? Especially for Rocket. Where is it? There it is. RKT. Oh my goodness, so much stuff to consider. I don't even know. I don't even know where to begin. I do feel the Mag 7s are, with the exception of Amazon, overextended right now. Amazon, I think least so. They've been in this weird channel for, not channel, I suppose, but this double top here, which is a questionable location to be. What's Apple doing? Oh, my cup and handle on Apple happened. Interesting. I don't look at Apple that much. I don't plan on ever playing Apple. I missed it in 2004 when I wanted to buy it. What was it at 2000? Like genuinely, I wrote on paper. I wish I bought Apple, but I have no money because I was in college. Where is it? God, we got to go real. Oh, gross. What was it at? 2004. It would have been in the summer. So let's just say August, something like that. Oh my God, gross. I was born at the wrong time, huh? Well, whatever. We have Reddit now. That's all that matters. So, yeah, we got a lot of crazy big earnings coming out this week. Be careful out there for sure. It's gonna be rotation out of Mag 7 into the small caps. I don't disagree. So if that's the case, if you think that, and I'm not saying for certain, but the fact is, the Mag 7 is so big right now, everywhere. 4.5 trillion. What was Amazon? I just had it open. 2.3. What's Apple? 3.9. Google was 3.5 or whatever, 3.15. Who else did we have on that list? Microsoft. Microsoft is at 3.9. Who am I missing? Meta, 1.8. Remember that guy who told Zuckerberg, wrote a letter, it was all over Reddit 10 years ago, that, look, $1 billion is a lot of money. Microsoft is trying to buy Facebook from you for $1 billion. Or was it Google? Somebody, right? Apple. I don't know. Whoever it was. Like you're out of your mind for not doing it. And Mark's just like, nah. Now it's, man, doesn't that guy look silly, huh? 1.85 trillion? Jeez. Time is a funny thing. Yeah, so, you know, some of the small caps that we might see some action in, things like Bull, that'd be exciting for sure, which I do think we're cupping on Bull. Let's go, oh, we're on the daily. We've got a lot of small cap potential. You know, even things like CoreWeave, you got to keep in mind, 66 billion sounds big, but compared to these mega caps, Mag 7s, that is small. That's nothing. That's not quite a rounding error, but you know, they could buy them with change in the sofa, I think. So yeah, we'll see. The problem is some of the small caps that are fun, ASTS, etc., are wildly overvalued for zero revenue, right? Like negative revenue. Gross. I don't know what to say about those. Calls on IWM. Okay, IWM calls have literally never worked out for me. I've done them a couple of times. And even IWM, by the way, like on a whole, look at that. They've had quite the run from, but you might be right. Maybe we'll see some more IWM action. Oy. I don't know. Look at that V. Gross. The problem is everything is probably over. As we've been saying, everything's been overvalued for a decade. So it's really hard to use that as a indicator these days. Maybe Bitcoin is the play after all. Yeah. Anyway, that's everything I got for today. So, anything you want to see that we haven't talked about? Oh, I gotta ban people on YouTube already? Oh no, I'm not on my shoot. I need to switch to the right account here so I can ban people. No, that started the music over entirely. Pop out chat again. Hopefully with the right account this time. Yes, no? Yep, perfect. Goodbye. I can remove, I can't ban. Can I ban? Hide user on this channel. Is that the best you can do? Well, I guess you can report spam. Harassment or bullying, maybe? Spam. Okay, solve that problem. Okay, cool. Well, that's going to be it for today. Unless anybody has anything else they want to see. It was a good week again. We hit our 1%. We got a real good week lined up. Almost 0.5% lined up already for next week, with a lot of opportunity, a lot of uncovered positions as well as covered. Pattern, by the way, actually, okay, I'm not done yet. I want to look at Pattern. Pattern was a nice little run up this week for any of you who have that butte. Let's get back to the daily. We drew this wedge and had been sharing that for a while. I don't think anyone was expecting this breakout, but here we are. And what a run in a few days. We went from, I doubled down, by the way, here. So I had 1,000 shares. I bought somewhere up here, 1472 or something like that. Doubled down at 1340 or 50. Brought that cost basis to 1410 or something. And boom! We didn't even draw a God Arrow, but this is like, that's legit, right? Why though? I don't know. What I will say is options were just unlocked on like Tuesday or something. So maybe, or Monday, maybe that had something to do with it. But 5 juicy green bars in a row. And we got earnings coming up, which I think they're going to blow past. I think they're going to have great earnings. So I'm holding these uncovered. We'll see where it goes. I kind of wish I bought more down here, but I was out of cash again. So it goes. Anybody else have Pattern? Maybe it's just me. And then what else we got? Bull we talked about. CoreWeave. Deck. Oh, I gotta cut deck. God damn it. I don't want to talk about deck. I didn't even talk about deck. Okay. Here's my biggest loss incoming ever. Probably. I'll probably sell deck. You know, cost basis somewhere up in this range, this blue bar range right here. And boom. Earnings. This guy, they beat earnings handily. And look at that drop. Guidance was just garbage. The thing is, this drop, I don't understand how it dropped like that after reporting good earnings before the call happened. Like, that's kind of wild. But I'm probably going to stop out at 85 on this. Otherwise, I'm gonna end up holding it forever again. And we were like super support here at 93 or whatever, but not anymore. Nope. This is the new support line down here, and I don't like it. I think we've got a chance at testing it, and I don't want to be there. I don't want to test at 80. So I'll probably get out of this early next week and put that cash in some of these plays that we're talking about and give ourselves some better opportunity for upside, or maybe just have a cash position for potential bad earnings to get some good deals. NEM is another one that I looked at, and I wish I got at 80 again, but I didn't. But yeah, it's another potential. Okay, now that we talked about deck, we talked hymns, we talked Ibid and Etha, Archer and Joby, Google and Ons. We're done. So thanks everybody for tuning in today. As always, it was a pleasure to talk with you all on this beautiful Sunday morning with some coffee that has finally woken me up. And it's time for breakfast, so I'm going to go do that. We'll see you next week. Next week should be the regularly scheduled time, either Friday night or Saturday morning. I don't know. We play those by ears because I got kids and kids' activities that are always throwing things off. But until then, look forward to a really nice weekend. The rest of it, check out the bakery tonight with Muffin Man. Should be a good one. And look forward to next week. We got a lot of wild stuff about to happen. So hopefully we're all on the right side of it. And with that, I got to find the stop button before you all make a crazy face of me. What face should we freeze on